Good evening, everyone, and today is the first day of the month, and I'm in front of you with the equity outlook. October turned out to be a very challenging month. Sorry, who would have expected Israel and Hamas conflict, which started in the first week of October, and then yield went in the US, and that created a lot of problem for the market. Not only Indian equity market faced the brunt of heavy selling, but even the US market had a very similar kind of a price movement. So all this I'm going to discuss in this webinar, and again, of course, we'll discuss about what could happen in next couple of hours from FOMC, and that's and so. But before I begin my webinar, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Investment in securities market are subject to market risk, and past performance is no indicator of your future returns. Now, if you look at it, the Indian market definitely struggled, and I think there was a more pressure on the mid and small cap. The sentiment was subdued, and this is despite the macros looking very, very good, India Inc. numbers looking very, very good, but somewhere market seems to be on a risk-off mode, and that it's more so happen by mid of October. So, like, even though the Israel-Hamas war, the conflict started in the first week of October, but I think the market started deteriorating more so in the second half of October, and that's what basically reflecting. Good news is that GST collection has been extremely good. In fact, second highest ever collected in the history of India. 1.72 lakh crore, 5.5% month-on-month growth, and 13% growth in the month of as compared to last October. I have been kept saying time and again that the GST collection is a true indicator of what's happening in the economy. And if you remember last month, I said that numbers from India could be extremely good purely because of GST collection has been robust, and that should reflect in India Inc. numbers. And of course, when we discuss what has been the journey so far for the September numbers. In the month of October, Election Commission announced assembly election for the 5 states: Mizoram, Chhattisgarh, Madhya Pradesh, Rajasthan, and Telangana. The last election will take place on 30th November, and result would be announced on 3rd December for all the 5 state assembly. Only in 1 state out of 5, BJP is ruling, that is in Madhya Pradesh. All other places, either it's a Congress or some other party. But market would definitely look at what is happening on Madhya Pradesh and Rajasthan. And these two will clearly give an idea what has been the mood at the state level. But please do not conclude that this would also, many people would call it as a semi-final and so forth. That's all nonsensical thing. Because the mood for general election and mood for the assembly election are two different things. Just those who are have a short on memory, the last assembly election for Madhya Pradesh, Rajasthan, BJP did not do well. But in general election, BJP did very well. So, and vice versa also. If BJP for some reason does not do well, doesn't mean that it will not do well in general election. And the same way, if BJP does well in assembly election, not necessarily you should conclude that it will continue to perform well in general election. But that's what Election Commission announced. The dates for election. Direct tax collection continue to remain very, very robust. Net tax collection has been 18% till 9th October, and the data will get further revised. Another good news is that India's inflation cooled off to 5%, and even core inflation, which moved down to 4.6%. 4% is the range that RBI is comfortable with. WPI inflation in India, 6th month in a row, is in negative. Now, normally when the WPI is negative, it should, with a lag effect, should reflect in the CPI. And taking a comfort from the inflation numbers, RBI decided not to hike rate of interest. The first estimate for the Kharif production is not so good. Why? It's 1,486 tons that we're expecting. That's a 4.5% lower than the last year production. But government hiked Rabi crop MSP from 2 to 7%, and I think it's very obvious. It was expected in line, number one, because to increase the purchasing power, and second thing I believe that general election also it helps this kind of a hike in the MSP. Onion price are becoming a challenge, and to control onion prices, Government of India announced minimum export price of $800 per ton. Am I right? And also at the same time, it has imposed 40% export duty. So not only you can only export at the higher prices, and that will also attract 40% export duty. While we have been kept saying for many months now that Indian economy should grow handsomely and it should significantly aid to the global growth. And in the month of October, S&P Market Intelligence came out with a report saying that India would be the third largest economy in the world by 2030. So that's another, and I think it's not only S&P Global Market Intelligence saying, that many other experts and agencies are saying something very similar. It's a 3D effect: demography, democracy, and the digital. These are the three which is basically helping India to grow in a very handsome. In fact, people are talking about now 6G, while the world is still talking about rolling out 5G. India is talking about 6G. The good sentiment always percolate down to the primary market. And as per the one study, India accounted for the 15% of the IPO that came globally. So you can imagine the kind of buoyancy that we are seeing in the IPO market. Despite sentiment went little soft in the month of October, if you look at the number of IPOs line up, they remain continuously very robust. And that's continuous. The good story continues for this one. Internationally, I think deadly war has there between Israel and the Hamas. No one has a clear-cut handle when it will stop, how it will stop, what kind of damage it would do, whether this result into a third world war or not. These are all the assumptions. No one knows for sure what will happen. IMF believes that inflation is going to remain a little stickier. And they believe that inflation in the calendar year 2024 would be at 5.8% as compared to 5.2% this year. And also lower down the global growth to 2.9%. While IMF is not so gung-ho about the inflation and the growth, WTO, that is the World Trade Organization, also had a very similar kind of a prediction, which believe that the exports, the global trade will come down to 0.8% as compared to previous estimate of 1.7%. purely because of geopolitical tension, manufacturing slowdown, China struggling, and so on and so forth. So I think that continues to remain a little challenge. So on the world front, things are looking little different. Another scary report that came out from the World Bank says that if Israel and Hamas conflict continues and flare up and more countries join, that is the Middle Eastern countries join, the crude can go up to $150 per barrel. And Chinese economy, despite including me, have full that there will be stimulus that could help Chinese economy to grow. I think it's continuing to remain struggling. It's struggle. In fact, today, if you look at the PMI for manufacturing as well as non-manufacturing, they both were little lower. In the USA, the inflation remained almost at the same level, 3.7% in August, 3.7% for the month of September. Core CPI moved up little bit to 4.1%. But more worrisome is a 30-year mortgage rate, which close to 8%, which is highest since 1990s, and even the yield on 10-year treasury is moved to 5%. Good thing happened is that in the third quarter GDP of US economy grew at annual rate of 4.9%. Having said that, this could be the best possible US could report in the near future. I think we should not expect this kind of a performance in the subsequent quarters. Europe also again is a little mixed picture, but Christine Lagarde, that the ECB president, completely ruled out immediate rate cut. Now let's come to the market. What happened to the market? If you look at Sensex in the month of October, from the peak of 66,473, we closed at 63,875. Almost drop of 2,600 points. And if you look at this market, on 17th October, which I was talking about, that's where it basically made, and then it has slide down very significantly. Maybe 6 days in a row, market declined, then 2 days in a row, market moved up, and again on 31st October, it moved down. So you can see more red bars as compared to blue bars. That clearly signifies how the mood in the month of October was. This is interesting data that if you look at it, monthly Sensex movement, whenever the Sensex has gone by more than 3%, the next month it goes up. And let me show you how. In the month of November 2021, it went down by 3.8%. The next month it moved to 2.1%. Something similar happened in Feb 2022, 3.1 moved to 4.1. In June 2022, it went down by 4.6%, but next month moved up by 8.6%. In September, it moved down by 3.5%, it moved up to 5.8%. But the trend got broke in December. In December, it was down by 3.62%, and it continued till March. That's a 4 month in a row. The indices kept on going down. There is a high probability, again remember these are all probability I'm talking about, nothing called sure shot. Since in the month of October it is 3% down, probability is high that in the month of October, November it could be in the green. But these are all probability. Advanced decline ratio remained almost 1 despite some selling pressure in the medium small cap. But India lost about 9 lakh crore market cap in the month of October. Why? Because we were 321 lakh crore as of September, which came down to 3.12. But if you look at it from the low that we saw in the month of March, India added almost 50 lakh crore additional since the low that we have seen in March. And since beginning of 2023, we added near about 30 lakh crore in the market cap. That does include some of the IPOs also. Volume came down in NSE, and that's a good sign. Why? If the market goes down with the lower volume, that means not many trades have happened and people are waiting on the sideline. The seller is not in a rush to get out of it, and buyer is not able to buy because there is no seller available. So going down volume is a good sign when the market has fallen. Realty index continues to defy gravity. I don't know how long that will happen, but the PSU Bank declined by 6.2%. If you remember last month, PSU Bank was the best performing index, and I did mention how long it can sustain was little doubtful, and I think that did not happen. It down by 6 points. But metal was also down by 5.7%. I think that somewhere China's stimulus package not happening is a problem. But someone was making me understand that there is some destocking is already done. So there could be more demand. If that happens, I think metal could have a good chance of outperformance. Right now, it has not performed well. So pharma also did not perform well, and Bank Nifty was down by almost 4%. Mid cap was down by 3.4%. Sensex was down by 3%. Nifty was down by 2%. But the small cap, despite the gloom and doom, outperformed. Why? It was down by only 1.7%. YTD, realty index in the top, small cap is up by 27%, mid cap is up by 23%, while the Nifty and Sensex, they are both up by near about 5.5%. But Bank Nifty closed in the red, YTD. And so is the case with metal, which is down by 4%. That's some of the best performers. And if you look at the worst performer, here you can see companies from the metal space. Tata Steel 7.9%, Hindalco 6.7%, JSW Steel down by 5.5%. I think metal did come under a lot of pressure in terms of this one. But FMCG did show some kind of a strength. Why I'm saying so? FMCG did show some kind of strength. If you look at it, Nestle was up by 7.7%. Tata Consumer was up by 2.2%. And Titan, which is again not an FMCG but consumer focus, was up by 1.3%. Nifty 50, YTD, Tata Motors on the top of the chart, and one of the worst performing is Adani Enterprise, down by 40%. Now, as I was saying, October was not a great month, not only for India, but also for the US market. Everything was in the red, and this is merely because of conflict between Israel and Hamas. YTD, Dow Jones, which was up by 7% or so, is now in a red territory. In fact, it is below the level it was there in 2022. Something pressure is also being built up on the Nasdaq, and probability is very high. We could see some profit making happening even on Nasdaq, which is 22.7% up. It can see some corrections happening going forward. FIS 2 months in a row, they sold out. If you remember, I was predicted that they could turn positive, which did not happen. So in other words, our prediction about FI turning positive did not come true. But the domestic institutional investors kept on buying very aggressively. 20,000 crore last month, they pumped in 25,000 crore. And if you combine FI and DI, they were net positive. Indian performance for the quarter ended September, 49.5% Y-on-Y growth in the net profit. Almost 60% of the market has already declared the numbers. And what we are seeing, the numbers in the gross profit, net profit, is very, very encouraging. So now what should we expect going forward? Today, Fed will announce in the next couple of hours. Our sense is that there will be status quo, no rate hike. In fact, Fed will keep a pressure on this one, saying that there could be possibility of one more rate hike, and that's the kind of stand he may continue to do that. Why? Because the moment if he says there are no more rate cuts, I think it could do a lot of damage, and whatever the work that has been done will become undone. Why? Because the market will start then discounting that there will be rate cuts, and that could impact the purpose for which Fed was hiking the rate of interest. news flow from the Israel will be very, very critical. Why? Because for some reason, if more countries join and it could create a problem, it could impact the markets. And right now, we don't believe that's going to happen, but this could possibility. Exit poll will be announced on 30th November because that's the day the last election would take place, and counting would be on the 5th December. Having said that, should you expect a major movement either way on the indices? The answer is no. And the historical trend just suggests that assembly election impact is not more than one day. So don't take a call on the assembly election outcome and decide this one. We were expecting FI to turn positive by mid of October. That has not happened. But we continue to believe that even today they were negative. I must tell you that also. But we believe that FI should turn positive purely because of valuation growth, demographic dividend, and India should remain a very attractive proposition for them. Result season continues. It's not yet over. As I said, only 60% has declared numbers. But it would be very, very critical, the commentary. And based on that commentary, sector and company can take a betting. We do believe till general election market will remain volatile, whether we like it or not. Why? Because the news flow will keep market on a tenterhook. Are we changing our target for Nifty 50 or Sensex for the year end, that is 2023? No, answer is no. We maintain 20,100 for Nifty, 68,000 for Sensex. We continue to believe mid and small cap will continue to outperform the large cap. With this, let's open the floor for question answer. Raut sir asking, what is the average holding time for stock recommended by you? So sir, as you know that Raut sir, we are basically driven by the IP. So we don't have any fixed holding as such for any stock, nor do we have a target price. We own some of the companies in our portfolio for more than 2 years also now. Company like Varun, company like ITC and so on and so forth. And there are certain companies we move out in a portfolio within a month also and within 3 months also. But my sense is that it would on an average should be in about 4 to 5 months if I have to take an average. And that's just a off the cuff remarks. Now the point I want to tell you that today no one basically follow buy and hold strategy. When I say no one, most of the fund manager. Even in mutual fund, fund manager don't invest and hold to that company for a longer period of time. Most of the portfolio do get churn within 1 year. So that's what you should do. I think you should not have a fixed mindset कि इतने महीने मुझे churn करना ही है. If the company is performing well, you may continue to hold, and if the company is not doing well, then might as well accept mistake and move on in the life. Akshay is saying, I'm unable to understand why do you take half-year 9-month results in safety calculation as half-year results remain the same for 2 quarters. So, sir, when we look at 6 months and 9 months, it accumulates the last 2 quarters and last 3 quarters. So, you are right. We look at how the company perform 6-month period previous to as compared to previous 6 months or comparable 6 months. And 9 months, the same logic. Okay, how the company perform 9 months versus the previous 9 months. That's the reason why we take 6 months and 9 months in the CFT. As an investor, we are concerned with alpha return compared to the benchmark. We are not concerned on the theoreticals of investing in top-rated companies across the market fundamental stock. It is so. It's been 3 years of experience under the rated model to infinity now in PMS portfolio. Sir, alpha should come, Sunil ji. PMS we have just started, and one should not lose patience unnecessarily, especially when the markets are little volatile. if you look at those who created portfolio in 2020 in October and followed in a model portfolio discipline manner, they would have definitely be generating alpha, provided they may not have had more investment in the interim, because then only it will become 3 years. Otherwise, it doesn't become 3 years. Am I right? And people have reaped the good benefits. So I beg to differ, sir, that in October 2020, if someone has started model portfolio, it is still not outperforming, provided the customer followed all the advice. And hence, my request to you would be, sir, please have patience. Sometimes, we do tend to get little impatient when market little volatile. And the beauty about it, in fact, someone was doing an academic research and he asked me a simple question: what it takes for one to make money from the equity market? And I said two things only: discipline and the patience. And I give you an example. Assume that if I give you, we both buy the same company at the same time at the same price. Not necessarily our returns would be the same from that company. Why? Because you may decide to exit early, you may decide to exit late, and that's going to define the returns. So my request to Sunil sir, have patience, have discipline. You would see the return alpha coming in. Otherwise, we have no business to be in business if we are not able to generate alpha. That's what my suggestion would be, sir. So Suresh sir, yes, you are right. I had confirmed that I will not be doing Diwali portfolio. Will anyone else will host the Diwali portfolio this year? If my memory serves me right, I think Mohit was suggesting that he might do. I need to check with Mohit, to be very frank with you, because I don't know whether he's doing or not. So, but what we'll do, Mohit is coming in front of you, all of you, with a very beautiful topic on housing loan. And at that point of time, you can ask him whether he's doing Diwali portfolio or not. But definitely, I'm not doing it. You're right. So you look tired today. Is everything well? Yes, I'm a little tired because back-to-back meeting was there, and I did not get enough time to even work on my PPT. So yes, I'm looking a little tired. I'm feeling a little sleepy also, but I'm perfectly fine. So nothing to worry about it. What is the increasing loan on India? Where the increase in GST being utilized? So there are two questions, Nilesh ji. Yes, increasing loan in India. Unsecured loans seems to be one area which could turn into a little problem. While the banks and NBFCs have been kept saying that we have a good diligence and so on and so forth, but RBI seems to be giving enough indication that that could be one area which could be a problematic area. And that's one of the reasons we are not so much gung-ho about the banks and NBFCs. And banks have really underperformed, as you could see in YTD 2023, and so is the case with NBFC. So there is a one area. Now, what could be the collateral damage because of NPA rising? One that banks will become more stricter in terms of giving unsecured loans. That could hurt the consumption cycle, because when you spend money on loan, you are able to spend more money. Someone else is getting benefit of that. So that could impact. Now, how much that becomes an NPA, how much becomes a risk, we don't know right now. I don't have the data, and I don't not made any calculations also. So we don't know what would happen to that. So that's one. And where the increase in GST being utilized, it's being utilized on infra projects. It's being, see, as you know, that government has announced almost 10.5 lakh crore on the capex this year, and it's all front ended. So I think the GST that is big good coming in is being utilized for the infra, and plus also government schemes and so on and so forth. So that's being used right now. So Abhishek is saying that, sir, I believe that medium and small cap will have a outperform second half, but we have very limited choice in Mojo stock in the set category. You are right. I don't know how many mojo stocks are there in mid and small cap, but in our PMS, out of our 100 rupee investment, mid and small cap accounts for almost 86-87% of the total portfolio value. So we continue to invest in PMS. In mojo stock, yes, there will be some few limited choice, but whatever is available within the mid and small cap, you should go and choose, utilize that. Am I right? But off late, I don't have any idea how many mojo stocks are there in mid and small cap, so I will not be able to comment on that. Mr. K is asking, one request is a quarterly, half-yearly, 9 months result progress. Half-yearly result data is not getting updated on individual companies' result section. Please see if it can be fixed. It is still show comparison of subsequent to. Oh God. Okay, that's a good point. I will please take this and put it to Karan, please. So I'll escalate to Karan basically, and this will get corrected. Thanks for bringing out our notice. We'll definitely take care of this, sir. That's a good observation. What is your take on company with less than 1,000 market cap buying markets mojo? Sir, see the company, those who are with less than 1,000 crore company, they are basically higher risk, higher return kind of stuff. They are micro caps, we call it. And where your entry and exit should be little nimble footed. If you make mistakes in terms of exit, then it could be costly affairs. And at no point of time, you should invest more than 10 to 15% of your portfolio in such kind of a companies. So even if you lose, your loss is not very big that it can impact your overall portfolio. So what is the outlook on the small and mid cap sector in the coming months? Sir, Siva sir, we are bullish on mid and small cap. We continue to believe that mid and small cap should outperform the large cap. We are not changing our view despite some kind of a selling pressure coming in mid and small cap. We continue to believe the delta between mid and small cap versus large cap in second half would be better as compared to the first half. One of the farmers going down today, is it an issue with the company? No, there is no issue with that company, sir. Please continue to hold that company. As it's down, some observations did come, but we are observing the situation and we'll come back to you in case if we need to do some changes on that. But right now, nothing seems to be a reason for this one. So yes, the news is not so positive, as you rightly so, because some observations come from US FDA. We are observing and we are trying to understand whether it's there in the price or not. If it is there in the price, then we'll take a call. But right now, no change. Continues to remain a strong buy. Mayank is asking, is the current situation of paper stock is a value buying or growth buying? So I would say they are value buying at this point of time, because if you look at their various parameters, EV to EBITDA per ton, EB to EBITDA, market cap to sales, PE, they are also all commanding in a single digit. So they are value buying. And of course, there will be a growth also. So it combines both, value plus growth both. I think it's a very little rare combination. Something available, growth companies available at the value buying. So Anshul is asking a very good question, that why is the rupee depreciating against the dollar if US economy or Indian economy is doing better than US economy? So sir, the currency is a function of demand and supply. If demand for dollar is high, definitely the price will go up. And why the demand for the dollar would be high? Because we have a deficit. Our imports are higher than the exports. That means we need to buy more dollar to meet our import obligation. But having said that, if you look at it, in 2023, rupee seems to have depreciated only by 1% or so. It's not that. So on an average, rupee used to depreciate by 4 to 5%. And this is especially when the rate of interest are gone up very significantly high in the US market. Why that is very significant to understand that? Because if US supposed to be the risk-free returns, and if the US Treasury is giving you 4 or 5% of the return, then why would you come to the emerging markets and then run a risk of a default, you run a risk of a currency depreciation, so on and so forth, and normally that the depreciation is much higher. But despite that, YTD we are just down by 1% or so in the rupee versus dollar. And the reason it's down purely because of demand supply. I think it's more demand for dollar as compared to the income that we have. Divakar is saying, sir, for students learning purpose, please make your subscription little economical. I'll definitely pass on your message to our concerned team, and they will do necessarily. But if you look at it, sir, our prices are very, very economical. What are we asking you to pay? Peanuts. If you look at the price per day we are asking you to pay, is very nominal. It's not that very, very high. And remember, the Markets is the only website in the country which offers recommendation with clear-cut recommendation on each and every stock. We have model portfolio where you can get 5 model portfolio. If you already have a portfolio, you can use portfolio optimizer to optimize your portfolio. We have stock of the month get released every month. We have screener, we have mutual fund section, and so on and so forth. So we are anyway economical. It's not that we are asking you to pay bomb actually. It is economical. Nonetheless, point taken, Divakar sir. I'll ask my concerned team to look in the subscription rate. And my suggestion would be, again, if you can come tomorrow and again ask our CEO, Mr. Mohit Basla, I think he will also be able to give a more reply, because he would know whether should you expect more concession for being a student or not. With this, just to reiterate, today Fed is not going to do rate any hike. Do expect market to remain volatile, but Nifty 20,100 by December 2023 and Sensex 68,000 by December 2023. Risk versus reward continues to favor the reward. In other words, if you are sitting on the sideline, please go ahead and invest, because we believe that Indian equity market should give bountiful returns. In fact, if you remember, like yesterday, Ramdev Agarwal said that Indian market will double in next 5 years. Mark Mobius said that Sensex will go to 1 lakh. So everyone is gung-ho about this one. So short-term volatility, brace that volatility. But the medium to long-term outlook remains extremely good. With this, thanks a lot everyone taking time out. Do attend tomorrow's Mohit special webinar. Those who are PMS customer, like Mr. Sunil Gupta, I'll be there tomorrow at 6 p.m. in front of you with our performance card. With this, good night, take care.